We partner now with the FT to bring you Lex on Bloomberg. You got a sneak peek at the Financial Times' flagship column a day early. Vincent Boland joining us now live from London. So, Vincent, we know the idea was to try to instill confidence in the market, but it's having quite the opposite effect.
Yes, it is. And I think that the chief reason for that is that there's a widespread view that it simply adds another risk factor to the Eurozone markets, and that it seems to be a unilateral move that is not going to be terribly effective in achieving whatever its aim is to achieve, and merely is another sign that the Eurozone policymakers are a bit at sea in addressing the Eurozone crisis.
Now, Vincent, we do know that it is a temporary move. I mean, it is only in place till for a year from now about. Why do you think this is being introduced now rather than at any other time?
Well, I think the timing is significant. I think, first of all, the German government, and particularly Chancellor Merkel and the Finance Minister Wolfgang Schäuble, appear convinced that the euro is under attack by speculators, and this is one of their responses to that. I think that the timing is significant in that the Eurozone has already produced a 750 billion euro package to rescue the Eurozone from the crisis that it's in, and there's a debate starting on that in the German Parliament today, and this appears to be a kind of incentive to MPs in Parliament to back the 750 billion euro plan, or at least the German proportion of that, which is very, very large.
And Vincent, I mean, you mentioned that Merkel is concerned, along with many other Eurozone leaders, about the euro being under attack. But one foreign exchange trader we spoke with this morning said, look, if you cannot express a bearish view for products, I mean, all the focus goes to the currencies. What are the voices, the critical voices that you're hearing on that subject?
Well, I think that you know, if you intervene in the markets in the way that the German government has just done and ban or prohibit a particular activity, you are obviously closing down one view of the market, and I think that is definitely going to affect investor behavior. The big thing that people are talking about in the market right now is that it's another risk factor that has been added to the mix in the Eurozone that investors have to take into account, not just Greek indebtedness or Spanish indebtedness, but unilateral policymaker responses to those kinds of issues. And this is a big new risk factor introduced into the markets right now.
So some see it as a dangerous precedent. Vincent Boland, thank you very much, joining us there from the FT in London.